So it's the first business day in the new year. Welcome to Business Incorporated. I am Bosin Amofaye. This is Channels Television. We're live to you from Lagos, Nigeria's financial capital. Now let's get the program started. Coming up, businesses and financial markets around the world open for business after New Year holiday, with Nigeria's Purchasing Managers Index declining to 54.2 reading in December. And global oil market opens the first official trading day in a bullish mood. Plus, trading on China's stock market suspended after the market dramatically plunged and triggered a new system designed to limit volatility. Now let's get the rest of the information out there for you. The first working day of the new year, businesses and markets around the world now in full swing. Here in Nigeria, the Central Bank of Nigeria is reopening the interbank foreign exchange market, which was closed on December the 21st for the holidays. The stock market brokers are also back at their trades working stations. The market indicators ended the year 2015 on a high note as the all-share index and the market cap appreciated at 6.59% and 6.62%. The stock market is set to close in about an hour's time, 2:30 Nigerian time, that is. Meanwhile, the Nigeria's Purchasing Manufacturing Index declined marginally from 54.4 reading in November to 54.2 in December. That's according to the latest data from FBN Quest. The investment research firm describes the figures as healthy but flattish. The report shows that the output sub-index emerged edged downwards from the previous month from 57 to 55 as production for the festive season peaked. Employment sub-index rating, however, declined to 49 from 55. The managing director of the International Monetary Fund, Christine Lagarde, is scheduled to visit Nigeria today. The IMF chief will be in the country for 4 days to hold talks with policymakers and key private sector representatives on how to help the country's ailing economy come up stronger. The working visit will be Lagarde's second time in Nigeria. Her first visit was in December of 2011. This comes after the IMF announced a cut in Nigeria's GDP growth forecast for 2016. That's to 4% due to decline in crude oil prices. Let's move on to the global oil market, reopening the first official trading day of the new week and the new year in a bullish mood. No thanks, however, to the fresh geopolitical face-off between Riyadh and Tehran, two leading oil producers in the region and in the world. Brent crude was sharply higher, 1.15% at 10 a.m. Nigerian time, and the U.S. oil up about 0.84% as Saudi Arabia recalls its mission staff from Iran with a 48-hour notice. The oil price, however, begins trading water around midday today, showing a 0.11% decline on the U.S. oil to $37 a barrel. And a very bumpy way to start the new year at the global equities market this Monday, led by China, spreading to Europe. On the flip side was a stronger crude oil market, no thanks to the fresh political hostilities between two leading oil producing countries. That's the Saudi Arabia and Iran. Meanwhile, a raft of manufacturing data is on the street today from Nigeria to Germany, Spain, and China. And I'm going to chew on these headlines together with my colleague Conrad Bossen, a DWTV financial correspondent for Channels Television at the Frankfurt Stock Exchange in Germany. Good afternoon, Conrad, and welcome to a brand new trading week and a brand new year. Let's get started with the raft of manufacturing data, or PMIs has been called, from Europe today, with Germany's reading better at 53.2. What does this mean for the region as a whole?
Well, both the purchasing managers here in Germany are particularly upbeat about the economy, about the factory situation, exports, manufacturing activity. But I have to say, all the data coming in from the Eurozone countries looked quite good. Also, Greece contributed to an overall increase of the Eurozone's manufacturing purchasing managers index, which has to do that, which means that the companies here in the Eurozone pretty well shrugged off the insecurities around China and around emerging economies. Of course, this has to do with the impact impact that these concerns had on the oil market and the oil price, our businesses here in Germany and the Eurozone do profit quite well and quite a lot from cheap oil and cheap commodities prices. The strong purchasing managers index came along with other news about the German economy today. It's from the labor market. Never before so many people had a job in this country, 43 million men and women, and that of course gives hope that support will come in the course of this year to our economy, also from the private consumption and domestic demand side.
Yeah, Conrad, I'm looking at the German DAX index there, flattish just across over your shoulder there. That's the first trading day, and Europe is getting clobbered, not just the German DAX, the London FTSE as well. Any correlation with the rise in crude prices due to the fresh power struggle between Saudi Arabia and Iran on one hand, and on the other hand, the restart of the U.S. oil exports?
Well, yes, of course, there is a correlation. It's not so much connected to the immediate effect on the oil price, but it's rather the overall reading of what's happening between Iran and Saudi Arabia, which is making people concerned. The way the governments in Riyadh and Tehran are dealing or not dealing with their political differences. War is a word that very few people here want to really speak out loudly, but it's certainly on investors' minds. What mainly triggered the sell-off on the markets in Europe today is, on the one hand, of course, the situation between Iran and Saudi Arabia, but also the news that you already reported to our viewers from China, the Purchasing Managers Index, which decreased there, surprisingly, the slump on the Chinese mainland stock market of 7%. This reminded people of what happened last summer, when during the summer months the China markets lost about half of their value. And remember, the Chinese government very surprisingly depreciated its currency, the renminbi, in summer. And something like this could happen again. That's what the concern is among investors, and that's why this very nervous reaction on the stock market here today.
Also, let's drive a bit of a Ferrari, shall we, with all the negative news. Ferrari is coming into the Italian stock market in Milan. Are you folks at the Frankfurt Stock Exchange? Conrad, are you expecting a Ferrari listing?
Well, the shares of Ferrari are traded here in Frankfurt, but the listing went underway without a lot of ado, not a big party. Of course, the #1 symbolic trading place for Ferrari shares in Europe is Milan, the Piazza Affari. That's the name of the stock exchange there. What happens now with this listing of the shares of Ferrari in Italy and the European stock markets is that Fiat Chrysler is getting rid of the remaining shares it held. It's distributing these shares among its own investors at a ratio of 1 common share of Ferrari for every 10 shares of Fiat Chrysler. And it's going to be interesting to see what are the shareholders doing now. Will they stick to Ferrari? Will they stay faithful with this luxury brand and its very exclusive business, or will they rather say, no, we stick with Fiat Chrysler, need this luxury share in our portfolio? Of course, a business pretty volatile. It's going to be an interesting year for Ferrari, and most foreseeably a very interesting year for the whole stock markets as well.
Okay, Conrad. Not a bad idea if you own a Ferrari on one hand and you own the shares of the same luxury company on the other hand. You can use both at the same time. Thank you, Conrad. Do have a great day. Conrad Boston, financial correspondent, DWTV for Channels Television at the Frankfurt Stock Exchange. We'll talk about Asian markets. We'll get a report from the second largest market in Asia. That's Japan. That's coming right after the break.